All right, traders, what time is it? It's pip grabbing time. Hey, traders, welcome to the Pip Grabber Trading Show. My name is Gary Fickard, and we're going to go ahead and take a look at trade opportunities that we can grab 20 pips out of the market. Now, we've got a couple of trades that we placed yesterday that we're still holding, but we did close out 3 trades. In fact, we took a trade on the New Zealand Cad yesterday before the news, and that paid out pretty well. So we'll go into all the details, what trade opportunities are setting up right now, and what you can look at right after this. See you in a bit. Alrighty, good afternoon, good morning, good evening, everyone, and welcome to the show. This is it's going to be an interesting show because we have definitely had a lot of conversation around the trading the opportunities that we're currently in, especially the trade copy. The trade copy is in on the Euro US dollar, and it's got quite a few positions in. It's actually buying the Euro US dollar, and it's also selling US dollar CAD. So those are the two positions it's holding, and it's been holding it for quite a while, but it's been cashing up on the other trade opportunities. And the reason why it's been the reason why it's been cashing up on those other opportunities is because that's how the system's built, right? It's built to be able to trade not only these 5 currency pairs that we focus on, but it does counter against each other, which means that if one's actually going into drawdowns, there's others that are generating profits. And that's how we can generate profits on week-to-week basis and build up such good results that we currently right now have. But obviously, there's a very important factor when it comes to trading this type of strategy. And that is, yes, you know, it is called equity management. If you don't manage your risk properly, you're going to run into drawdowns that you can't hold. And you're going to go ahead and say, big dog, I cannot ride out this wave, and I haven't got enough equity, and I need to close out positions. Listen here. There's 2 ways to destroy your trading account. Number 1 is over leverage. All right. If you over leverage, you are going to destroy your account. Now, what happens is when you over leverage, that comes into the second problem. The second problem is that when you over leverage, you cannot complete or at least follow through on the trading strategy. And so that becomes a problem. You can bring it, your honey. That becomes a problem. So if you're going to do both of them, all right, if you're going to over leverage, it's going to create the second problem, which means that you can't fulfill your trades, you can't complete your trades that you've gone ahead and set up based on the strategy. Now, what I mean by that is this. This strategy is all about a dollar cost averaging approach, right? Which means that we've got to enter in at different levels. Now, we're looking for support and resistance, and we're looking to buy at the support and resistance. We're looking to buy at support and sell at resistance. Now, the thing here is the market, and if you know this, then great. If you don't, this is new news to you. What happens is when we have these support and resistance levels, it's not a defined price, which means that we don't establish support and resistance based on a price. And we define it by an area. And that area could be 50 pips wide. The area could be 100 pips wide, depending on what the market feels or at least is going on, what's going on in that particular currency pair at that point in time. So there's an area of support and an area of resistance. So what does that mean? That means that using a cost averaging approach when buying at these support levels or selling at these resistance levels are very, very important, but it also is very good when it comes to not being right in the first entry point. It's okay to be wrong with your first entry. It's okay to be wrong on your second and your third entry point. But it's only okay to be wrong on those entries if you're going to keep entering if you've got good equity management on your trades. Now, if you don't have good equity management on your trades, then guess what's going to happen? You are going to run into some bigger drawdowns that you cannot withstand. And so we don't want traders to sit in big drawdowns that they cannot handle and end up taking some losses from a good position. You could be in a solid position, and you can look at good trade opportunities based on those solid positions. But if you don't have the right equity management set up on that, you are going to run into some problems. All right. So we're going to definitely go ahead and talk about equity management when we go ahead and talk about these trade setups, and I'm actually going to those traders that are connected to the trade copier. I'm going to go ahead and send out you a personal email where we're going to do a personal one-on-one session, and we're going to talk about equity management based on trade copier and based on all the details around that. So for those that are connected to the trade copier, I'm going to send you out a personal email. We'll go ahead and set up well, it won't be a one-on-one. It'll be a group conversation. We will go ahead and put together some information around managing your risk correctly when it comes to trading or using a trade copier. All right. And so this applies to whether you're using a trade copier or you don't use a trade copier. You've got to apply these certain rules in order to be able to survive and allow the strategy to play out what it needs to. So without further ado, let's go ahead and jump into some trade opportunities today and see what we can go ahead and grab out. We'll talk about the trades that we currently have that are currently still trading, which is on the Euro US dollar and I believe on the Aussie Cad. I think those are the two that's still active. We'll talk about them, and we'll talk about yesterday's trade as well, how we played through the New Zealand Cad rate decision. So that was pretty interesting last night, but we'll check it out, and we'll go ahead and look at some trades. So let's go ahead and take a look right here. There we go. All right, yeah, no worries. Okay, so now, oh, hold on. I must say this, though. I must say this. If you are comfortable with a 20% drawdown because you're looking for high returns, then that's up to you. Now, I do have, and I want to be open because everything I do here is completely transparent. There's nothing that I hide and nothing that I shelter here. I need to tell you this. I have trading accounts that I do want to risk a lot more because I'm looking for a bigger return in my investment. But I'm going to tell you this much. I always have backup cash. I always have money that is on the side that is waiting to fund that account if I ever need it. Now, I'm never going to use up the capital. I'm never going to put it at risk because if there's a flash crash or something like that happens and I end up losing that whole account, then I'm losing the money that I have in that account. But if there is a time that I'm going to need, and I notice that if there's a certain movement in the market that I need to have additional funds to fund that account, I do have it available. And so far right now, based on the risk exposure that I'm looking at, I'm making anywhere between 10 to 15% a return monthly, all right, because I'm using X amount of capital to run the system and generate profits from, but I always have this additional capital that by the way, it's not sitting there dormant. I'm actually trading it, but I'm trading at a very, very low risk tolerance, which means that my returns on the low risk tolerance is between 1 to 2, maybe 1 to 3% a month. That's what I'm doing on that, so that I know that I have the additional capital if needed to be able to fund the other account that I'm trading more aggressively. And so the aggressive account is trading anything between 7 to 12% a month. That's the type of returns I'm getting on that. If you combine the two, we're looking anywhere between 10 and 15% return total on both the portfolios. That's a good return. Now, without getting into the weeds of things, let's go ahead and jump into some trade opportunities today because I'm thinking this is what you guys are here for, right? To check out for some trade opportunities. So let's go ahead and take a look at some trade opportunities, and we're going to go ahead and make a decision as to how we're going to trade that system. Now, a question here is, Big Dog, long time mate, I hope you're doing well and don't stop dropping that knowledge. You bet, buddy. Not a problem. Not a problem at all. Now, we've got a trader right here that's asking, how do I connect with the trade copier? Yun, not a problem. What you got to do is take a look below in the description. All the information is in the description below. We've got details about the trade copier, the tools I use, social media connection. Check out the description in this video, and you're going to be able to get connected to whatever. And of course, if you need to send me an email, and if you've got any other questions, please go ahead and send the email to this email address. It is info@TradersNetworkClub.com, and we'll go ahead and address any questions that you have. Now, I do have a team of members, staff members that will address the certain inquiries and so forth. and handle stuff. In fact, Cameron will be the contact person. But if he needs to go ahead and get me involved in it, I certainly will be involved as well. So I am very, very actively involved in those decisions. Now, another thing here that's very, very, very important to note, okay? Firstly, number one, let's go ahead and take a look and see. Oh, sorry, my bad. Let's go ahead and take a look and see what opportunities we have right now that we can go ahead and trade. And then I'm going to talk about the risk tolerance around it, what I'm doing, how I'm applying it, and so forth. And I want to add this when we talk about risk, all right? Because I think it's important to note that. When we talk about risk doesn't necessarily have to mean that you got to place very low risk if you've reduced your currency pairs that you're trading. Now, I'm going to give you sort of an idea of how I would manage the risk if you're following these signals that I'm sending out right here, especially for those of the trade copier. This is what I've proposed as the risk tolerance that is needed in order to be able to trade and get good results. This is what I do. If you want to get a moderate return with a moderate risk, then you would have to go with around about every $1,000 that you have in your trading account, trade with one microlot. Okay, for every $1,000 you have, trade with one microlot per entry point, per currency pair. So which means every currency pair and every entry point is one microlot with every $1,000 that you have in your trading account. But I'm going to go ahead and say this. With a moderate trading approach, you may still need to have additional cash in order to fund it. If you don't, and you want to be more conservative, just double it up, which means this. Trade then with one microlot for every $2,000 that you have in your trading account. Okay? And that way, then you reduce your risk. You don't have to have any more additional cash to be able to fund it. It should be able to be good and solid based on equity management. You shouldn't have a problem. Now, keep it in mind, I'm also referring to trading accounts that have 1 to 50 leverage or 1 to 30 leverage or 1 to 100 leverage. Once you go above that, once you go ahead and trade with 1 to 1,500 or 1 to 500, then you might be good on equity or at least margin if you're trading one microlot for every $1,000. All right, you might not have to refund any or put more funds into that account. Now, we've got traders that have been very aggressive. They've got an international trading account. They've got $1,500 or at least 1 to 1,500 leveraging on the account. So which means they've got a lot of leverage to be able to place trades and not run out of margin unless, of course, they go into deep drawdowns. And with those, every 500, you could trade with one microlot. But again, if you ever need to fund more capital into it, be ready to be able to do that. If you don't have additional capital, then one microlot for every 1,000 should keep you in good equity management. All right? All right. Now, this is recorded. You can go ahead and check out the video again. Write the notes down. If you haven't written it down already, go ahead and write it down. And those are the type of things the parameters I work on. Now, again, the more conservative you want to become, all right, just then add an extra 1,000 to every microlot and say, okay, if I really want to get conservative, then every $3,000, I'm going to trade with one microlot. I've even gone to a point with one of my accounts that I have that I've used now as a backup. It's a backup capital, all right? And that backup capital is I'm trading every $5,000 with one microlot. So, yep, every $5,000 with one microlot, which means that it's very conservative. I'm never going to have a problem with equity. In fact, I'm at the moment right now, I'm at like 5% margin used on that account already with all the positions that I have right now. So again, you can certainly move your equity around and make sure that you don't over leverage yourself by adjusting that type of setup. All right, now let's get into the trading. Okay. Oh, by the way, and the reason why I do all of that stuff, because we don't use stop losses. All right. The reason why I use that type of equity management and that type of risk exposure is because we don't have stop losses. You could be a lot more aggressive if we had stop losses, but this strategy doesn't set up for stop losses. It sets up for cost averaging without stop losses and just targets. That's what we use. And if it's not for you, listen here. if the strategy is not for you, if you don't like the returns that we make, and by the way, check out the description below. You can check out the results that we're currently generating based on using the strategy for this whole year. We've generated over 15,500 pips and over 110% this year alone, and we're not done yet. So, does it work? Damn straight it does. Does it generate a lot of profits and pips? Absolutely. Is it risky? No. Can it be? Yes, if you if you over leverage on your trading account. All right, always. And I guess I have to go ahead and put a disclaimer out there. It's always risky when trading, right? It's always risky. Okay, so we just have to decide on what type of risk do we want to take. What type of risk are we going to take, and can we accept in the trading? All right, traders, a lot of preaching right now. It's not even Preachy Friday. Should be doing this on a Friday, shouldn't we? All right, so let's go ahead and take a look and see what's going on here as we dig into the details. Okay, there we go. I want to go ahead. I just read ahead and reset my camera just to make sure we don't run out of camera. Let's go ahead and take a look at the trades opportunities today. Now, here is the Euro US dollar. And we are currently in on the Euro US dollar. Now, I'm excited about the Euro US dollar. I'll tell you, I'm excited because I think we're going to get a nice little big rally to the upside pretty soon. Pretty soon. Now, the reason why we're getting the dollar rallying at the moment right now is because if you actually think about it, the Feds aren't doing anything about interest rates, right? And inflation is blowing through the roof. And because inflation is hold on a second here. I just got the Pip Grabber right now telling me that we closed out a trade. So we just closed out the US dollar CAD positions. Nice. So we've actually had a lot of closeouts right here. Yep, we've actually just closed out all the US dollar CAD positions right now on the trade Copier. And so we actually had a whole bunch of trades that are locked up in that trade. Let's go do that first. Let me go to the US dollar CAD right here and take a look and see. Oh, look at that. All right, very nice. So we had quite a few positions in. Let me go to the Pip Grabber right here, and let's go ahead and refresh it. Let's see if we can get an update. So this is a 2-hour update. So this was 2 hours ago. And if you look over here at the summary, no, I don't think we can do the summary. Let's see the exposure. We can't do that either. So let me go ahead and see if I can pull up here. Okay, good. So this is here. So here's the exposure here. So we actually had right here, if you take a look over here, you can see how the euro is killing me at the moment right now, down 16%. You're thinking, wow, this is an aggressive account right here. All right, 16% is not a big deal for me, not a big deal. But take a look over here. We had the US dollar, all right, we had the US dollar CAD right here that was in a position. Look at our break-even point. Our break-even point would have been at 126.56. So 126.56. Let's take a look here. 126.56. So it took us out at break even. So we got out of break even. So which means that the trade copier really is trying to figure out, hey, listen here, we need to let cash go. We need to start releasing some margin. And so we closed out that position. And it looks like we did not close out in net profit, but we broke even on that. I'm certainly going to go ahead and check it out and make sure about that. And we'll talk about that in another video. But that's where we are right now. So we closed out the US dollar CAD. Now, the question here is, are we done? Do you want to go ahead and trade more of the the US dollar CAD? Well, let's take a look at this 1 hour right here. So the 1 hour setup right here, this is the downswing. Oh, look at there. Wave one. Yep, wave one right here. I'll have to go down to the 15 minutes to see this. Wave one. Okay, so we don't want to trade the US dollar CAD right here. The reason why I don't want to trade that because of this reason. Let's go to the 15. So that you can see there on the 15-minute time frame, a lot better and a lot easier to see. Sorry, I got to drink my cup of tea right now. So if you look over here, we got the market creating this wave. So there's the wave one, there's a wave two. We did come back up to retest this wave one right here. It went slightly above that, that's fine. Then it dropped down south, taking out that low. And with taking out this low right here, we are chasing after the 1.27 right here, which means we're going to get a bounce back up again. So I probably don't want to trade the US dollar CAD today, and that's because we might get a little bounce, and we're in the middle of the road right now. So we can see that there is about 13 pips down before we get to that level, and then we could possibly go back up again. So I do not want to trade US dollar CAD right now. All right. So it's a good thing we got out of that sell. We could have picked up maybe another 10, 15 pips and would have given us a net 20 pip profit, but we did not close out that. So we'll go ahead and leave that on the sideline. Let's go to Euro US dollar. Now we're in on a trade on the Euro US dollar. Here is the trades that we got in yesterday. And you can see right here, we're in on 4 positions on the Euro US dollar, 3 positions on the CAD. So if you look at the Euro US dollar right here, we are currently at the moment right now, we are about 29 pips away from break even. So, and we've got probably a little bit more than that. Let's see, at 20, so 1232. Yeah, so it's going to be another 10 pips above that we're going to go ahead and net our 20 pip profit. So we'll continue monitor this. All right. So we're in on the Euro US dollar. We're still long. If you're not in on the Euro US dollar and you want to get some action on that, at the price we're trading right now is probably the best place to get in, because we got about 30 pips to go before we get to that break even, and about 40 pips to go ahead and make some profit. So if you're getting now and you look for a 20 pip profit, you should be able to get it. In fact, you could even go ahead and look for a 40 pip target on this and possibly even benefit out of that as well. So there's that. Let's go to another pair. So we're still in on the Euro US dollar. Let's go to New Zealand Cad. This is what we picked up last night. You can see we actually were long. If you remember, we were long New Zealand CAD yesterday, and we ended up taking profit on that trade, which is pretty awesome. We took profit on that trade, and we got the heck out of Dodge. So we profited on that trade. Let's go take a look at the actual setup and the results. Here's the results here. Just complete transparency here. Let's go to, let's modify the results here. Let's go to custom, and let's do the last 3 days. Okay, there we go. And so, yeah, you can see here that we did have a New Zealand CAD buy. There it is there. We had 1, 2, 3. We had 3 positions in, and that closed out with net profit on that position. So we did close out with profit. And that was surprising because we actually had a lot of widened spreads last night. So at 8 o'clock last week, when the news came out, we did see a lot of wide spreads that took place. And here is the news. Take a look at the news right here. Here's the the central bank. Central bank made a decision to raise the rates 25 basis points to 0.75. They did exactly that, and boom. What happened? The markets actually did the opposite of what normally happens. When normally the central banks raise rates, it normally creates some strength in that particular currency pair. It did not happen because the situation we are in at the moment right now is that there is a lot of issues around inflation. And the US right now, the problem here with the US is that they just letting it go, which means the more the inflation increases, the more pressure that the Fed's going to be under to actually raise the rates a lot faster and higher to try and control inflation. And that's going to be a disaster right now. But if they don't do anything, that's even worse than doing something right now. So I think doing something would be better than not doing anything at all. But it is what it is, and this is the problem that we have with the US. Now, this makes us think a little bit right now is that if this is going to be the case, if we're going to start seeing the central banks making decisions, and the decision is to raise the rates, then that's not going to go ahead and do what we normally have been seeing in the past, where when they raise rates, it's actually good for the currency, and the currency starts moving north. In this case now, it actually makes the currency weaker. So if that's the case, then think about what's going to happen. If they have to force, or if the central bank or the feds here in the US are forced to go ahead and raise rates because they have to go ahead and control inflation, what's that going to do to the dollar? We just saw what happened on the New Zealand dollar last night when they went ahead and raised the rates 25 basis points. So what do you think is going to happen on the US dollar if they do that as well? Well, my guess is that the dollar's going to go ahead and fall. That's what I'm thinking. Dollar's going to go ahead and fall. Now, good. Oh, it looks like US dollar CAD closed with plus 20 pips after 6 close. All right, good. So we did close out 20 pips. All right. I wasn't too sure. I had to go and check that. So appreciate that. So we did close out with 20 pip profit on that trade. Good. Excellent. Yeah, this week we probably Thursday, Friday we're probably going to get very low margin trading on Thursday and Friday because of the holidays. So yeah, it might be. But remember, if the markets are busy range bounding within a 20, 30 pip range, if the markets are range in 20, 30 pips, we're still going to make money. So we can still make money. All right, let's take a look at the next trade here. I'm going to go to the so hold on. So New Zealand Cad. Are we going to make a decision here on the New Zealand CAD? All right, we've seen this big sell-off since the news came out last night. The question is, do we want to get involved? Well, the first thing I'm noticing right here is this. We have a wave one that price has come all the way back down to, right here. And so if I look at the overall picture, let's go to the daily on this, and take a look at the overall picture, right? And the overall picture right here is that we are range bound, right? We are range bound right here. Now, if we are range bound on the daily time frame, then where did we come off last? We came off support last, and so this little pullback that we're seeing right now is just a little pullback as price goes ahead and looks to rally back up again. So the question here is the New Zealand CAD done with its sell-off, and are we now going to bounce off support and start working our way up slowly, or is it going to be aggressively? So let me take a look here. So if I look at the daily, all right, so on this trade, here we have a wave one. Market pulls back. We went up to the 1.27, creating this head and shoulders pattern. I'm going to go ahead and clean up house here. Hold on. So we went and created this head and shoulder pattern. So we're looking for price to take out the low right here. And that is right here. Okay, so we're looking for price to go up to this level right here. All right, or at least come down to this level right here. That's what we're looking for the New Zealand. Because if we go into, and let me go ahead and clean up house here. Oh, hang on, I don't have to do that. Let's do this. All right, so this is what we're looking at right here. We're looking at this to be that upswing. This is the retracement right here. And so as the market fails to go ahead and hit the 1.618 right here, we're looking for price to come back down to retest this level. So when we look at this right here, then yeah, there could be some further downside move down towards this level. But remember, we're looking at the daily time frame right here. And so if we look at the daily time frame, what's happening with the inside swings right here? Do we have a point right here that we've got support, and is the market going to go ahead and bounce back up again? So I'm going to go ahead and take a look at the lower time frame, move this down to a 1 hour, right? And then on the 1 hour, let's take a look over here on the swings on the 1 hour. As we dig deeper into this, take a look from the top here. Well, firstly, number one, we also picked up there where there's a wave right here. So there's a wave one resistance becoming support here. But take a look at the downswing from there down to here. What did the market do? Check this out. The market created this irregular flat. Look at this irregular flat right here. It went ahead and did this, created a wave, took out the low right here, went back up, took out the previous high. Here was a sell opportunity here. Market dropped back down. We're now at the 1.618. So now at the 1.618, traders, do you see what's happening down below? Look at the oscillator down below. What are you seeing down below right here? All right. What are you seeing down below? We're seeing another support level. All right. So here's the ironic situation right here. As we're looking at the New Zealand Cad, as we're looking at the technical analysis, and we're establishing that there's support at this level for a whole bunch of reasons, we just got a signal on the trade copier now. Trade copy says what? Trade copy says new order buy New Zealand Cad at 86.95. 86.95. What? Are you kidding me? So someone's reading, I think the trade copy is just watching this video or something. I don't know. But it says buy at, what is the level again? At 86.95. What is price trading right now? 86.94. Right? It's trading 86.94. So guess what we're going to do right now on the New Zealand Cad? Does anyone know? Anyone know what we're going to do on the New Zealand Cad right now? We are going to buy. All right, so New Zealand Cad. Let's go to New Zealand Cad right here, and this is it right here, and boom, I'm in. All right, we're long. We're long. Let's just wait for it to happen. Hold on a second. It hasn't confirmed yet. I'm in here. Let's see if I can get it to update. Boom, I'm in. All right, so we're in. So we're in right now on the New Zealand Cad. Now, once again, check out the description below. You'll find my Telegram channel for trade signals that we do in this session. You can get all of those trade signals, what we do here manually, inside the Telegram. Check it out, and you'll be able to get to that Telegram channel. All right, so now we are long on the New Zealand Canadian dollar. Let's go take a look at, and I see a lot of trades right here. So what about the Aussie Cad? Well, I think we're in on the Aussie Cad already. Yep, we're long on the Aussie Cad at the moment right now. And we should have gotten another entry point, or just about. Let me see here. How far are we away from getting another entry on this? We are like pips away, like a few pips. All right, so we're about like 4 pips away from being picked up on a fourth entry point. All right, so we're long on the Aussie Cad. So we're going to leave that to the side. That's what we picked up yesterday. So I'm going to leave that on the side. Let's take a look at Cad Swiss. All right, let's go to Cad Swiss right here. Now, Cad Swiss, you see right here we had a wave 1, 2, 3, 4, 5. It came back down here. And let's go to this chart right here. Let's go flip it over to a daily. If you look at the daily right here, you can see that there's this big move to the upside. We did bounce off this level. It's been pretty aggressive going long right here. Why is this chart taking so long to load? So if we go ahead and hide all of this stuff out of the way, you can see a lot clearer right here. Okay, so we have a price currently sitting at, let's see here, we've got, let's see what we can do here. Looks like I got a wave 1 right here, going to a wave 2 right here. So this is wave 1, 2, 3. Prices come back down here. We should bounce back off again. So the daily actually tells us that price should move back up. If you look over here, we do see that with the oscillators confirming the bounce here. And so we should be seeing price continue to move north. Okay. So we should be bullish on this overall. Let's take a look at the details now. And let's move this down to a 4-hour. See what I got you on the 4-hour. So the 4-hour, I've been looking at these downswings right here. And frankly, to be honest with you, I'm not too convinced about us moving any further than that. But let me just clear up house here. All right, so we've got these swings right here. But again, I'm not too Not too excited about this. I see we broke out of a bit of range here. So off this support right here, the 4 hour says that we're in an overbought condition. Let's go to the 1 hour again. Take a look at the 1 hour. So if I look at the 1 hour right here, there's a wave 1, 2, 3, 4, 5. See here. Let's go to US oil quickly. I want to go ahead and take a look at US oil here. We said that US oil needs to drop below towards this level right here. All right, let's go to the daily on this. Okay, US oil is going to continue to fall. Did we take out wave 4 though? Yeah, we did. We took out wave 4. So we had a wave 1, 2, 3, 4, and 5. It's taken out wave 4 right here. So which means that this ABC is complete and we're looking for price to move actually north on US oil. And we're still looking for the target on US oil to be up here at $88.75. $88.75. Interesting. So let's do this. Let's take a look over here and see. Let's go down to the 15 right now. I want to just see how that swing looks like. Could we see a little bit of a pullback on US oil right here? So after that rally that we've just seen over here, could there be a pullback? And the answer to that is, yeah, there's that possibility of a pullback going down. Let's go to 1 hour. Oh yeah, definitely. Oh, wait a minute. Not so much here. If you look over here, we have a rally, dip, rally, and now there could be a dip right here, or it could be range bound, and then another rally right here. So US oil could push up a little higher to take out that high there around about 80 or 79. What's that price there? 79.31. So if US oil is going to strengthen, let's go back to Cad Swiss right here. Man, Cad Swiss looks like it's got to pull back. There's got to be a pullback right here. It has to. It's got it. Let's go to the 15-minute again. So wave 1, 2, 3, 4, 5. So let's go. Okay, yeah. So this is the 15 right here. Price is trading just at the 1.27. Yeah, we should be seeing price falling back down south again. Traders, I'm going to go ahead and short the Cad Swiss right now. I'm going to do a sell on the Cad Swiss. So Cad Swiss right here, I'm going to go ahead and sell it for that 20 pips on the Cad Swiss. Okay. So we stand aside on the US dollar CAD. We're in on the Cad Swiss with a sell. We currently still in a buy on the Aussie Canadian with a buy. We are currently on a buy on the Euro US dollar. And we are now on a buy on the New Zealand CAD. So we are not going to trade the US dollar CAD, but we are in on 4 other positions. So we should be good to go right now. All right, so that should be it right now. And We've got Dave says, are you using the leveling in app script in MT4 to add the extra positions in MT4? Is that the yes, David? This tool that you're seeing right here called the Pip Grabber tool. That tool is going to be available very, very, very soon, even possibly this week. But check out the description below. You'll see how you can get onto the waiting list. There is a waiting list below. Check it out. You can get onto it, and then you'll be able to. We'll be able to send you some information about this tool when it's going to be available for you to be able to get hold of that. So go ahead and check out the description below, and you can certainly go ahead and check out the details of the tool when it's available. All right, that pretty much is it for us today, traders. That's it. Listen here, if you're a subscriber of the channel, fantastic, well done, congrats. If you're not a subscriber of the channel, make sure you go ahead and subscribe to both the FxBigDog and the Traders Network Club. We're going to be doing different videos on different channels. We're still working out some of the logistics, but we are going to be doing separate broadcasts and separate channels with separate information. So make sure you subscribe to both the channels. Firstly, number one. Number two, if you are down below, checking out the description down below, make sure you also go ahead and smash the like button. Traders, I've got plenty of students here in the room. This is growing. The session is growing. We're getting a lot of people excited about it. But you know what? All I ask for you to do is to support the channel by smashing the like button. So if you can do me a favor, take the effort, take the time, go ahead and smash the like button. Thank you very much. Appreciate that. And we'll see everyone back again in the next live session. Now, we're not going to be in on Thursday and Friday. So this will be our last session for this week. But we will be back next week. And if you want updates about the trades, make sure you go ahead and connect to the Telegram channel. All right, we've got two Telegram channels. FxBigDog trading channel, and then we also have got the Traders Network channel where you'll get the trade signals that are being posted in this session. So check that out. Check out the details. And traders, have a blessed weekend. For those that are celebrating Thanksgiving here in the U.S., have an awesome Thanksgiving and lots of food. But then again, lots of rest as well as we come back next week, ready to rock and roll. So with that being said, this is FxBigDog wishing you peace, joy, and lots of profits. See you next time.